back with first trades right here on ET Now. It's literally 5 stocks to the green because the list of losers is extensive. Heavyweights like Bajaj Finserv, SBI, TCS, M&M, Tata Consumer, Eicher Motors, ICICI Bank, I go on. They're all under pressure. And mind you, it's a cut of 200 points on the Nifty after what we've witnessed last week, which was pretty tumultuous, barring Friday's last minute relief or last hour relief at 16,890. That's where we're at. And the broader markets as well decisively in the red. Moving right on then, Keshav Bhajanka is with us, ED at CenturyPly Boards, joining in to talk a little bit more about the business outlook. Good to have you on board. Now, to begin with, Keshav, channel checks are expecting a volume drop of nearly 10% sequentially for both MDF and plywood in Q4, and that's largely on account of the higher interest rates impacting real estate sales and weak consumer sentiment. Is that something that you're seeing?
Good morning. You're absolutely right. Demand in the market is looking slightly weak. However, having said that, in plywood, I think we have performed reasonably well. The first 2 months have been good, and there's been no degrowth. In MDF, as you are aware, we have a capacity limitation, and with the second line beginning commercial production at the start of this month and ramping up gradually, I think in MDF as well, we shouldn't have any drop as compared to last quarter. But yes, that is more due to the fact that we're a market leader as compared to the overall sentiment in the market, which happens to be somewhat weak.
The sentiment weak. About a year ago, there was only demand, less capacity. Every housing strong home improvement company we spoke to, they are of the view that before we are manufacturing, we are sold out. What has changed is what we are trying to understand, and why it has changed.
I think it's not rocket science. Today, the interest rates have gone up. As the interest rates have gone up, EMIs have also jumped. And as EMIs have jumped, discretionary expenditure has been reduced to a certain extent. So I think this is somewhat temporary. Perhaps for another quarter or two, there might be some pain. But overall, long term, we still see robust growth and robust demand.
You have to compare the current demand environment with the pre-COVID environment. For a minute, let's take out the word COVID. What happened to interest rate? What happened to the unlocked trade? Let's take it out. How would you compare the current scenario with the pre-COVID trend?
I think fundamentally there is one change, which is the organized sector, the so-called branded products. The demand for the same has gone up as compared to the unorganized sector. I think the fundamental shift is in the mind, and it is to go with more recognized, perhaps stronger brands as compared to unorganized material. Consumers are now more quality conscious, and they are perhaps moving more towards organized as compared to unorganized.
Sure, but Keshav, given the fact you talked about that demand is a bit tepid, I'm guessing that you won't be able to take a lot of pricing hikes, and that would mean pressure on margins because you've already lowered your guidance for FY23 margins for all the segments. What about FY24? Do you anticipate some sort of improvement, or the margins will broadly be between this 12 to 14% range for plywood and laminates and 20-25 for MDF and particle board?
I think long term, we've been very consistent with our margin guidance. There could be periods where it is slightly lower, slightly higher, but overall, the 12 to 14 for plywood, I think we should be able to maintain. And we have in fact taken a price increase in January itself in the plywood category. So I wouldn't say that there isn't a scope. As you correctly mentioned, we have pricing power because we're the market leaders. But definitely the ability to take price increases in a slowdown is more difficult. However, we have still been able to do the same. So I think margin guidance for FY24 remains largely in line with what we had given for FY23 earlier. But we'll see as the situation evolves.
Keshav, one thing that you've emphasized in every reply of yours is that you're a market leader. Tell us, what's the market share been like this year? What are you anticipating it will move to?
So in the organized segment, we are anywhere between 25 to 30%. As you know, in our industry, getting data for plywood isn't that easy. But I think that our objective is within the course of the next 2 to 3 years, we'll be looking at a 30% plus market share in plywood.
Okay. Let's understand the international trend for MDF and plywood. That also is declining. What roles does international volatility play when it comes to a market like India?
I think it does impact. You see, in India, the quality of MDF that is being consumed is slightly different compared to international markets. And as such, the premium segment of MDF isn't really too badly affected. Having said that, there is an overall glut because interest rates have not risen just for India, they have risen right across. So, because interest rates have risen, discretionary expenditure across has seen a hit. So, I think with these inflated interest rates, there is likely to be some trouble in the short term. But having said that, the Indian economy is fairly robust, it's resilient. So, I'm not too bothered by the international changes that are taking place. I think it creates short-term pain, but going forward, we will have a robust roadmap back.
I'm just going to put a chart here, and this chart is of international MDF prices, where international MDF prices were, and this again in dollar denominated. It's a data which we've looked at globally. Uh, just bear with me, that data will just come up on your screen. What we understand is that prices internationally have gone back to levels of 2019 and 2018, which means they've gone back to really 6 year low and 5 year low. Why is that happening?
As I already mentioned, there is an international glut, a supply glut, which is caused predominantly because of two things. One is the shipping rates have reduced, so supply is moving all across. And the second is the rising interest costs. When you're factoring in the US dollar prices, you also need to take into account the dollar was at 65 rupees then, whereas it's at 80 to 83 rupees right now. So there's a form of natural hedging. It's a 20% plus increase. So there is a natural hedging that takes place, but you're correct. The dollar prices have moved down. Uh, Despite of that, India is still seeing robust demand for MDF, and that is supporting players like us.
Are you witnessing, Keshav, any sort of a slowdown in luxury? Is that impacting the overall demand?
Slowdown in.
Luxury?
Um, I think you need to categorize buyers into two brackets. One, there are those buyers who aren't affected by a slowdown and will continue to purchase regardless of what is happening in the market. The second, and perhaps the larger chunk, is those where the discretionary expenditure hit that is being caused is causing delays. So I think those delays are coming into play in the luxury segment as well, but perhaps not as much as in the medium segment.
Okay.
Thanks very much, Keshav. Good to have you on board and just dissect how business is shaping up overall. Just identifying then some of the stocks within the broader markets as well that are managing to buck the general trend.